JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 7th of February 2022. So yeah, welcome everyone guys. Welcome to this Monday's live session. Where as always we're gonna have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, guys, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then guys, I really hope you can hear me well. Finally running this one live after kind of a week of not doing that. But yeah, yeah, I can see the chat room here. Yep, good morning to thank you very much for the comment. So yeah, good morning to everybody else who's joining in as well right now. So before we go into the charts, as always, just a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which is also updated on a daily basis. So yep, check us out here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, guys, the first one I want to pick up here is Nikkei 225. So the index did kind of try to move a little bit higher today, however still remains below this downside line taken from the high of the 5th of January. Now I had this arrow previously where I said that we could see maybe a push a bit higher, but if this area here near this downside line does provide good resistance, then another slide here could be possible. We kind of already got that little slide. Now the big question here is, can this actually end up being a further slide? Well, to be honest, this is where I'm going to remove my arrow, and for now we'll keep an eye on this downside line. And another thing, and I'm going to keep an eye on this hurdle right here, this 26,955 level marked by the lowest point of August. Now I'm not really saying that that we cannot really go lower or anything, but at this point I'm trying to figure out if this is not going to end up being somewhat of a kind of a bullish flag here. However, it's not really an ideal picture here. We need kind of our nice little pole here, but again, maybe this little consolidation could be that little corrective move before another possible move higher. However, either way, guys, either way, we still need that confirmation break. So if you're looking for something, if you're looking for some upside, then wait for at least a break of this downside line and then a push above this 27,594 territory, somewhere around here. And at the same time, if we jump above that, above all that, we could also push above the 21-day EMA. So in other words, we're waiting here for this push. We're waiting for this pop here above this area right here, roughly around here. It's not really like a specific level or anything. It's just mainly the area that we're watching. So in order for me to, like I said, get a little bit more comfortable with the upside, that's what I need here to see. I need to see that break. In terms of the downside, now if we drop below this 26,955 territory, somewhere around here, then yes, this could increase the chances for this index to kind of move lower maybe again. But again, let's wait for that. At the moment, I'm just kind of playing the waiting game here because it's quite interesting here, and it's going to be quite interesting to see what's going to happen further. For now, yes, I'm watching the levels. Now the German index, DAX. So Looking at this picture right here, I can see that on Friday we had quite a decent decline here, and we broke below this upside line. We fell back below this 200-day EMA, and well, we kind of approached this this highlighted territory right here. Well, I mean, I would say, as you remember last week, I talked a lot about this one, and I said that overall, I'm watching this one, and I'm I want to see if this is not going to be somewhat of a range here. At the same time, I'm watching this kind of double top here pattern, and at the same time we are keeping an eye on this maybe potential head and shoulders pattern as well. Well, and to be honest, the head and shoulder pattern seems to work out. To be honest, it seems to be working out. So yeah, this is where, like I said, this is where it's gonna be quite interesting to see what's gonna happen further. Will we get another rebound here from this territory, from the area near that psychological 15,000 mark, or are we actually going to end up breaking it? And well, if we do, then certainly yes, further declines, guys, are possible, and it could confirm basically a possible strong move to the downside, because as I said, on one hand we have a range here, on the other hand we have a double top with a bit of a combination of a head and shoulders pattern. So yeah, it is quite an interesting one. It is quite tricky at the same time, but yeah, let's not forget that still this could rebound as well. It could rebound, push back up again. I mean, we've seen that happening, for example, in USD CHF. I mean, last week I talked about this, and yeah, let's wait. I mean, although it's quite tempting, but let's wait for a better kind of better move here. Currently, the cash index is trading at around 15,200 level, so basically nicely above kind of Friday's close. Now jumping into the S&P 500. Now this is also a little bit unclear here, because well, on one hand we have, as I mentioned with Nikkei, for example, yes, we have an index which is kind of showing maybe willingness to travel a little bit higher. DAX is kind of a little bit on the weaker side, but the S&P, I would say, is somewhat flat for me right now, because on one hand, yes, we are like trading below this downside line taken from the high of the 4th of January. On the other hand, the cash index is currently sitting at around 4,507 zone, so we're above Friday's close. We're kind of sitting somewhere around, I think, a little bit around here. I'm going to keep an eye on this. Still, if I'm looking for some upside, I'm going to keep an eye on this downside line, and if I'm looking for some upside, then I need to see a pop above that 4,595 territory right here, marked by the current highest point of February. If we get that pop, then this will confirm a forthcoming higher high, and well, potentially more buyers could join in. But at the moment, we are, like I said, we are stuck in here. I mean, although it has a good chance to drift lower, but certain confirmation breaks are still needed. So for example, for let me just get rid of this line here. For the downside, I would prefer maybe to wait for a drop below this little hurdle right here, this 4,453 level. And if we do that, then yes, I'll aim for that 200-day EMA. And if the 200-day EMA fails to provide support, then that, well, I mean, we could start rolling over here, and we could start falling further south. DXY, the dollar index, so good rebound. Now this is where I'll probably start drawing more lines here, because I'm trying to find somewhere a good area, a good spot here. So something like this could still be possible. I mean, we did kind of rebound from this area, from the 100. Actually, we rebounded more from the 100-day EMA, and yeah, these upside lines are, yes, are tentative, but we can keep an eye on those just for that maybe extra confirmation. If you're looking, let's say, for some downside, then of course, yes, not only that we would like to see a break below this 100-day EMA, but also a drop below these upside lines here, yeah, keep your eyes on, of course, on the lowest point of last week near the 95.52, sorry, 95.30 14. There we go. Somewhere around there. So 95.14 area. Gonna keep an eye on that one together with, like I said, with all this, with all these upside lines. We are trying to push right now back up here on the DXY. This is where I need to adjust a few levels. Now, previously I looked at this hurdle here. We dropped below it, but we got a hold up near the 100-day EMA. What I would like to see here now, and this is where I need to readjust a few things here. So yeah, somewhere above this area, I would like to see a move. I would like to see a push above this 96.24 level. And if we do that, if we get a nice push above that hurdle, then, well, I mean, this is where it might be a little bit more interesting for a few more buyers, because at the same time we would be back above all of the EMAs here on our daily chart. And another thing as well, if we, let's say, you know, draw a Fibonacci level here, then if we just pick up on these levels, you can see that on Friday, after we managed to reach this hurdle, this 100-day EMA, we already managed to retrace at the same day to do that 23.6% retracement on the Fibonacci. In order to, like I said, if you were looking for some upside, well, maybe at least wait for a push above that 23.6% retracement on the Fibonacci, and then we could target the 38.2, which is roughly around that 96 territory, approximately around there. But of course, this is where the highlighted territory comes in, and that's roughly around that 50% retracement on the Fibonacci. So if we move above it, then yeah, we could maybe, like I said, consider a larger already move to the upside. So yeah, keep your eyes on this, guys. I mean, on this one, and yeah, let's wait and see. Let's wait and see. Gold. Gold is trying to make its way higher. I talked about this level here, the 1810 zone, 1810, 11, approximately around there. We did have a pop on Friday. We moved higher. We also pushed above the 21-day EMA, but failed to stay above it. Today we also pushed above that hurdle, but we're currently failing to stay above it. Now, I'm going to take a bit of a cautiously bullish approach on this one, and because somehow it seems that the commodity is struggling with these with these levels, with this hurdle here, the kind of this 1811 and the 21-day EMA. If we do pop above it and stay above it, then yes, I'll continue targeting. I'll continue targeting the upside here. Now, in terms of the downside, guys. Now here, of course, I would like to see this one maybe dropping below this 200-day EMA, and then we could slowly start aiming lower. But again, this would be a little bit on the difficult side here, because yeah, we would need to see maybe a drop below some of these hurdles, but we could already start looking at lower levels if we do drop below that 200-day EMA. Now, WTI oil, I mean, look at this, guys. I mean, this is just yeah, non-stop to the upside. Last week, if you remember, I said, and I talked a lot about this, and I said that if we do stay above that upper side of the rising channel, then, well, I mean, the further upside could be possible. Well, I mean, we got that. Probably what this chart requires now is actually a removal of all the drawings here. So let's have a fresh look. First of all, let's establish that we have an upside line here. I mean, let me just check if this is going to be ideal or not. I think, well, I don't think that it's going to be ideal, but, well, let's be honest, nothing is ideal in life. But anyway, so yeah, looking at this, I mean, we could see this one maybe draw this upside line. Tentative, of course, don't get me wrong. It's really unclear here, because, well, we do, it's kind of a touch here, but not really. We do have a touch here. I mean, if we do draw it this way, maybe yes, but like, again, like, it's not really picture perfect, I would say. So yeah, I'll keep this for now, just as a point of reference, but like I said, it's not really ideal here. Now, in terms of the downside, now, if you're looking for some downside here, well, I mean, at the moment, I would say as long as it stays above that upside line, yeah, it's going to be a little bit difficult here to find some sort of a move lower. Now, in terms of level here. Also keep your eyes on maybe this one right here, this 86.78. That's kind of marked by the low of last week. No, sorry, the low of last week was somewhere around here, I believe. There we go. Yep, that's the low of last week, near the 86.38. A nice drop below it may attract a few more sellers. However, at the moment we are kind of leaning a little bit more towards the upside, especially if we pop above last week's high near the 93.14 zone. And if we do that, then, well, we will need to start aiming for other levels. And yep. Let me just put this on the chart. Okay, let's zoom in here. So the levels I'm going to start looking at is going to be this one. Is going to be the first one, the 94.89 zone. That's marked by the high of the 30th of September of 2014, guys. That's how far we have traveled. And also I'm going to keep an eye on the highest point of September of 2014, and that's roughly around, let me just grab this one, roughly around 95.89. So we have the 94.89 and the 95.89. So good potential targets. Like I said, initially I'm going to start aim for those. After that, of course, we do have a bunch of other levels to keep in mind, like for example this one right here, the 99 level. And of course, I mean, I don't even need to mention this, that you know, on everybody's kind of you know, list, and everybody's target right now is that 100 zone. So to be honest, not saying that it's not possible, but for sure a good potential target, the 100 level is something to keep in mind. Of course, not very nice for the motorists, but well, I mean, that's kind of you know, that's the situation that we're currently sitting in, and we have not been at these levels, well, for quite a while now, guys. I mean, since 2014. So yeah, and I believe that for now what I have here is that the highest point that I've had here is oh, let me just grab this one on the chart. Can I just pick it up on this? Well, okay, I cannot. I'm trying to capture this, guys, but it's not really allowing me to do so. Okay, this is the level of 2000, and can I just need to zoom in here. I do apologize for that, guys. The chart is just a little bit on the smaller side, and I cannot capture it. Cannot capture that peak. Well, anyway, in that case, roughly, boom, 112.21. That's the highest point of 2013. If we take a look at, of course, at the you know, the crisis that we had here, and at the kind of at the end of 2007, the beginning of 2008 here, and well, I mean, that's, we still have plenty of room to go, where to go. Of course, the peak that we had here was at 147, guys. I mean, given, I'm not saying that, you know, that we will be heading that way, or should I say we'll be reaching that, but we're certainly heading in that direction for now. Let's see how this is going to play out. For now, like I said, I'm kind of looking at this picture, and I'm aiming higher, but I need to see that pop above the last week's high in order to go for some higher levels. Ripple. So the crypto world is coming back to life today, and yeah, we are popping above this hurdle. I talked about this level here previously, this 0.6985, and yep, we are above the downside line, and we are above this hurdle, so I would say everything's looking quite positive here for now. I'm currently aiming higher. I'm going to stick to this area. This is my target, the 0.8660. That's near the 200-day EMA. I'm going to aim for that first, and then we'll take it from there. For the downside, I would need to see a drop below this area somewhere, below the 0.5750, somewhere approximately around here. And then if we do drop below this area, then yes, my next target is the lowest point of 2021, if I'm not mistaken. Let me just quickly double check. No, sorry, no, that's the lowest point of June of 2021, near the 0.5125, and then so on and so on. But for now, I'm leaning a little bit more towards the upside. Now, jumping into a few pairs very quickly before I run out of time. Aud Jpy, guys. I've talked about this pair last week, and this is where I mean this one always kind of follows, or it's a good indicator of what's happening in the equity world, because this pair is a risk monitor, a good risk monitoring tool. For now, I mean, I need to see a clear break through this downside line, and then a push above this 82.28 level in order to go for some higher levels. For the downside, I need to see a drop below this 81.39 level, 38 zone, and I would like to see the pair staying below it in order for me to, let's say, aim for lower levels. But given, I mean, as you can see here, we have rebounded from this hurdle, and we're kind of trying to push back to the upside. Now, this is where I said also keep your eyes on that, and as on the equities, on the indices, because those, I mean, especially like I said, let me just go back to the S&P 500. So this is the same story. I mean, we're kind of stuck here. I mean, we're near this downside line. The same story was with the Aud Jpy here. We're also kind of stuck near this downside line, so we just need to see some good, activity, some risk on, the risk on environment kind of coming back, and then yes, we could see a nice pop here through this downside line. However, as long as this downside line remains intact, we cannot really, get comfortable with the upside, and that's why it could still drift, further south, guys. Now, jumping into USD Jpy, the same story, and this is why I keep talking about this. I'm not really kind of that bearish, because we have a downside line here, which is getting tested again. This downside line is taken from the high of the 4th of January, and well, we're waiting to see what's going to happen here, because at the moment we're back above this 115.07 level. I talked about it. We can actually remove it now, no longer needed. Now I'm going to just draw it right there. If we do pop and stay above this downside line, I'm going to aim for some higher levels, guys. USD Cad, very quickly, this one is also quite interesting. So here we have an interesting situation. Let's see if the dollar will have enough steam to drag this one higher. We are keeping an eye on this this downside line here, taken from the high of the 20th of December, and of course we're keeping an eye on this upside line taken from the low of the 21st of October. So in other words, we have a pair which is stuck, which is kind of coiling up, if you're looking for some downside, then and actually this is where I need to probably remove this highlighted territory. I'll redraw a few things here. If you're looking for some downside, we could start already looking at lower levels on a break of this 1.2650 zone. If we drop below it, then yes, we could go for some downside. We could go for this upside line taken from the low to 21st of October, and then we'll take it from there. In terms of the upside, yes, we need to see a break of this downside line. Basically, we need to see that that pair coming out of this let's call it the triangle pattern, and then we will take it from there. But like I said, it's quite interesting. Keep your eyes on the developments, keep your eyes on DXY, keep your eyes on the WTI oil. If oil continues to accelerate sharply, then we could see this pair drifting nicely to the downside. But if DXY suddenly picks up, and we may be a nice good pop here could be possible, and then we'll take it from there. GBP and ZD, guys, quick update. I'm not going to spend too much time on this one because the same analysis remains valid. I need to see that clear move, and I would need to see the pair staying above that 2.05 territory in order to go for some higher levels. At the moment, I'm just observing this one because it's quite tricky. On one hand, we do have a pair which is quite, let's say, overstretched a little bit to the upside in a very short term, in a short period here. Still, in order for me to consider the downside, I would need to see a break of this upside line and then a drop below that 21-day EMA. For now, it's still a good possibility that there is still a good possibility that this may drift further north. Euro CHF, guys, very quickly on this. Look at this beautiful thing here. I mean, it beautifully rebounded here, pushed higher, and this is what I talked about, and I said that keep your eyes on this hurdle, keep your eyes on this area, the 1.05, 11, 12 zone marked by the highest point of January. And as you can see, last week, after, of course, we understand why. I mean, we had the ECB the ECB press interest rate decision, followed by press conference where we saw that strong move in the euro, and yeah, I mean, a nice good pop above that 100-day EMA. So for now, everything's looking quite positive here, and as long as it stays above that 100-day EMA, I'll continue aiming higher. My next target is the 200-day EMA. I'm not drawing any levels yet. I want to see how we're gonna trade near this 200-day EMA. And finally, EURUSD, guys. Beautiful hold up. And if you remember, guys, last week I talked about this idea here. If we pop above the 1.1330 zone, what I'm gonna do, I'm gonna aim for the 100-day EMA, and then I'm gonna aim for that 1.1483 zone, which we managed to test perfectly. So good achievement, good result. And now what I'm going to do here is I'm going to take it carefully. And of course, you probably know me by now. I would rather stay safe than sorry in such situations. What I'm kind of considering here is maybe we could see a bit of a retracement, something like that, basically in a curve to the outside. But in either way, I mean, still a pop above this barrier would be needed, this 1.1483 zone, just to be a little bit more on the safe side. If we do pop above it, this will confirm a forthcoming higher high, and then we could start aiming higher. And yeah, this is where I'll probably aim for this area. Well, initially I'll aim for the 200-day EMA, of course, but then, or before that, we have this 1.1529 zone, which previously acted as a fantastic area of support. Now it could take the role maybe of a little resistance level here, maybe a temporary one, but yeah, if we clear that, then my next target is the 200-day EMA, and if we go further north, then well, we do have a bunch of other levels to watch around here. But of course, the main point right now is to keep an eye on this hurdle right here, and yeah, if we do pop above it, this might attract a few more buyers. If the pair continues to trade somewhere around here, below this hurdle, below this barrier, and but above this downside line, I'll just continue observing the price action. I'm just gonna take a bit of a neutral stand here. For me, I would need to see something else here in order. Let's say I would need to see this one falling maybe back below this 1.1235 level in order to go for some lower levels, guys. So yeah, that's it for the session. I really hope you found it useful, guys, and thank you very much for joining in to this live session finally. But again, you probably have already realized that there's a bit of a pattern here. So yeah, for this week, the live sessions will continue. Next week, I believe that it might be again kind of reverted to the recordings. But yeah, I hope you find usefulness in both of those, and in general, I hope you find my videos useful. Thank you very much, guys, for your views, for your likes, your comments. I really do. So I really appreciate that. So I hope you have a fantastic trading day. Stay safe, have your stop losses in place, and everything will be fine. And I'll see you tomorrow at 7 o'clock GMT time. Thank you very much, and bye-bye.